You're listening to the Master Passive Income Podcast Network. Welcome to the Master Passive Income Show. My name's Dustin Heiner, and I'm here to help you get financial independence, quit that job, that just overbroke job, by investing in real estate so you never ever have to work a job again. And today, I am super pumped to be taking you behind the scenes into a deal that I'm currently taking down, a 355-unit apartment complex, and I'm going to let you listen in as us real estate investors talk shop so you can see what it's like to buy a 355-unit apartment complex. All right, let's start the show.
Welcome to the Master Passive Income Podcast, where we talk about investing in real estate with a special focus on making enough money so you can quit your job and live the dream life. And now, here is your host, Dustin Heiner.
What's up? Super blessed as always to have you here with me on the show. Now, a couple things before we get into it. So if it sounds a little echoey right now, it's because it is echoey. I am in my new house, this short-term rental property that we bought, and it's literally empty of furniture. And now I flew here. I'm in Tennessee right now, bought this house for $420,000. Put 10% down. Now we're spending close to $30,000. Actually, it is over $30,000 in furnishing this short-term rental property. So the furniture is coming tomorrow. Now, I could have just done all this remotely, which I was going to do, but I decided to make this a twofer. You know, 2 for 1 or twofer. So I'm coming to be here at my house because the furniture is coming literally tomorrow. But I'm here in Murfreesboro, Tennessee, where our new 355-unit apartment complex is, and being able to tour the complex, see what we're buying, and I'll be completely straightforward and honest with you and say I probably would not have even flown here to see either the 355-unit apartment complex or the short-term property. But it turns out that the people that were helping us to actually get the furniture in and get everything set up, they are going to be out of town, and the furniture is coming from Colorado, so I had to be here. I could have got the property manager. I could have done a couple other things, but you know what? It's a really quick turnaround. So Monday night is when I got here. I'm literally recording it Monday night. Comes out tomorrow morning. This podcast does. And then I'll be flying back out Wednesday. And so this house, the short-term rental property I have, is phenomenal, but you got to see this apartment complex, this 355-unit apartment complex that I am buying. I'm going to be doing some walkthroughs on social media, so check it all out on Instagram, The Dustin Heiner. Look me up, The Dustin Heiner. But I'm going to be doing some lives also. I think I'm going to do some lives. I'm going to try to if I remember. But I'm also going to do some stories as well as some reels showing you what this awesome new 355-unit apartment complex is looking like. There's so many amazing things about getting more different types of asset. Because you guys, if you've listened to me very much, you know I'm a buy and hold residential, 4 units and below. I love those. But I also love expanding into other asset classes like multifamily or storage facilities, mobile home parks, things like that, because they're all really great investments as long as you buy it right. And this short-term rental property is probably going to be making us $2,000 a month in passive income or more. You know what's funny? I have my property manager actually put it on the market. Well, let me take that back. He put it on the market to make sure that everything was working, just like a test. Put it out there, make sure Airbnb actually works well. And it was up for maybe like 1 or 2 days. And we got somebody to book it for like 5 days at, I think it was $380 a day. And it was just a quick listing. So I'm super pumped about this area. And it's so cool that it's already rented. I have other people, even though it's not even on the market yet, people are inquiring about it right now. So I'm very, 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 very pumped about this short-term property. So we're gonna do really, really well. Who knows? We might not even move into it. It might be a fantastic Airbnb, and we'll just buy another property that we want to live in. But with that, the 355-unit apartment complex, it's going so very well, and we're raising $12 million. And in that raise of $12 million, we're getting lots of different investors. And so on this recording that you're going to be listening to, had a webinar with Jason and P. Lee Urusi, good friends of mine that are also general partners with me, Also on were some other investors that I brought this to so they can ask questions. Now you're going to be able to listen in on a call where we talk all about the property, and this is what you would get if you were going to be investing in multifamily. You're going to have these types of calls. You're going to have to learn the lingo and all that good stuff. That's why I want you to hear this, because Master Passive Income, we coach residential. We also coach multifamily investing. So that's why I want you to learn all these things. So for single family home, we can do long-term, medium-term, short-term, and even co-living. Those are all great options. And we also have multifamily, which is commercial investing. So we are working through all of that for you. And I want you to be ready to become an investor, a more advanced investor, investing in larger asset classes that you might even have to raise money for. And in the last few episodes, I have been discussing how to protect yourself when you're doing multifamily investing, how to make sure you're doing it right, all the pros and cons. So go back and listen to those previous episodes. But this deal, this 355 unit apartment complex, honestly, it has checked off all of the boxes for me personally in order to mitigate risk. Now, you know, and I know it's a bummer when you lose money. And I lost plenty of money in all my real estate investing. I kid you not. I personally have never taken on another project that I didn't buy for my family and myself. Never brought on any investors and never became a general partner on a property. And the big reason why is because I never felt comfortable enough on a property to put your money at risk. Now, if I lose money for myself, that's a huge bummer. I mean, I'm not happy about it, but it's not the end of the world. I would hate to lose your money. Like, that's something that would just eat me alive. And so if you're a accredited investor, you want to invest with me, I've done everything I can. And in this episode, we talk about all the great things about this property that makes it mitigating the risk as much as possible. Buying it for $90,000 a unit when it should appraise for about $145,000 a unit. We are also having an 8% preferred return. Preferred means you as the investor gets paid before the general partners get paid. If you don't get paid, we don't get paid. And it's 8%. So if you put $100,000, well, I probably shouldn't tell you this, but my wife would probably kill me if she knew. She doesn't listen to the podcast. So I'll tell you, we're going to be putting $100,000 in of our own money. I would never invest in a property that the investor did not put their own money in. Well, I believe in this deal so much, I'm putting $100,000 of my own money on top of the house that I just bought. So I don't have any more money to put in at the moment. But if you have somebody that puts their own money in, and you put $100,000 in, you're going to get 8% return every single year, paid quarterly. So it's annual, 8%. Put $100,000 in, you're going to get $8,000 back. Paid quarterly, you get $2,000 every quarter, $500 a month. So it works out really, really well for passive income. On top of that, we're trying to exit for 2.5 times our money, which is terrific. Anyways, I'm going a little bit into the episode where we actually take you behind the scenes so you can see the workshop. Oh, and one quick thing. So I have the actual recording that you can watch. It's not public on YouTube. I have it in YouTube. It's actually hidden. So I have the special link that you can watch. You can see all the numbers. You can see us walk through everything. Because I really want you to be really, as best as I can help you to be, ready for when it's time for you to invest in a syndication, in a multifamily, in an apartment complex or something like that. So check the link in the description for the YouTube video so you can actually watch the video yourself. I won't actually open it up to the entire YouTube channel just because, I don't know, I don't feel like I want to. I want to just give it to you guys because, you have to be an accredited investor. And then there's a few ways to become an accredited investor. Number one, having $1 million in net worth, making over $200,000 a year in income, something like that. Basically, the government wanted to make sure we're like anybody that's going to be raising money is not going to be just going after mom and dad, mom and pop places that have, $5,000 to their name and try to take their money. Anyways, let's jump into today's episode where I am going to be walking you through, and Jason and Preely are going to be walking us through this amazing deal. And honestly, if you still want to invest, you have until June 10th to fund. So you have basically a week to fund. Check the link in the description if you would like to join us in our investing. We already have, $5 million raised when we need 12 million. So we're on our way to get there. And so it's looking so fantastic, but we still have room for you if you want to invest, if you're an accredited investor. Cool. All right. Now let's hear the recording of our walkthrough of the deal that we took other investors through so you can learn as much as you can about how to invest in syndications. All right, here we go.
Fantastic. I'm Jason Ursi. This is my wife, Preely Ursi.
Aloha.
give an introduction on our company and who we are.
Fantastic. So we created Yarusi Holdings back in 2013. Like Dustin, we actually started in the residential space. I became a real estate agent. We got into flipping, wholesaling, small multis, and then we jumped into large multifamily back in the beginning of 2017 in Kentucky. And since then, we have amplified and built our business, Yarusi Holdings, to where it is today. It's really amazing to meet you all, and thank you for coming on for our presentation.
So since 2016, when we transitioned to multifamily, we've acquired over 32 properties now. It's a little over 3,000 units in 7 states in totality, with the majority of it being Middle Tennessee. Since that time, of the projects we've done, we've gone full cycle, meaning that we've purchased the property, done the repositioning, and sold the property for 14 of them, with the 15th and 16th happening in the next 3 months here. Very excited about this project here. It speaks to our core business principles. It's our bread and butter. It's right here, as Dustin said, in our backyard. It's where we already own and manage 500 units. So I'm going to jump in here. I'm going to share, make sure I have sharing access onto this here, and we will get started. All right, so property we are here today is the Cove. The Cove is 355 units. It's here in Murfreesboro, Tennessee. It's spread across 4 properties. However, those 4 properties are contiguous, right back to back across the properties, right next to Middle Tennessee State University here in Murfreesboro, Tennessee. So a little bit about Murfreesboro, Tennessee. You may not have heard of this city before, but it has had a tremendous run in the last decade in terms of growth. It currently, in the last 2 years, has been the number 3 and number 16th fastest growing city in the nation. Most of the other cities you see on there are Florida, Texas oriented here, some out west, but you have Murfreesboro, Tennessee. A lot of factions for that. It used to be the capital of Tennessee. And for that, the roadways, the infrastructure was all built to a line where pretty much you have a hard time getting through Middle Tennessee without coming across Murfreesboro. Well, that's played a big role in a lot of other major employers also coming here as well. So we have everything from major medical to, of course, MTSU, which I said is the second biggest university in the state. We have a major Nissan facility, a lot of back end on warehouse. We also have major FedEx. So there's a lot of major employers that continue to pull people here to this city. Last year was actually the biggest year on record where, in terms of sale growth, in terms of volume for houses, it historically in the past had at max 15 houses sell over $1 million. They had over 60 last year. Ton of energy, ton of people coming into this market. And on the other side of it, we have a massive difference between supply and demand. We are in a big run where we need housing in a lot of different markets, and the same is true for Murfreesboro, Tennessee. One of the major factions here, though, is because of the major growth that's happened in Murfreesboro, Tennessee, we've outbuilt the infrastructure. So the sewer system itself is at capacity, so they are not allowing units to be built to meet the demand. And if they are being able to be built, it's very much harder for them to come out of the ground, and the density that will allow them to be built is about 60% of what the market would be if we didn't have this sewer capacity. So the city itself is working to fix this issue, but with anything of trying to keep up with the growth still happening, it's a hard run for them to meet those needs, and so it's going to be years to come. So this property, again, is 355 units. Again, community is 3 miles from our headquarters. One of our other partners, Chad King here, is a Titan Capital Group. They split the office with us, and they manage the properties here also with us in Murfreesboro, Tennessee. This opportunity is being brought to us by a seller who purchased these properties between 2012, 2013, and 2014. Again, I said it was 4 assets. They've had this property, and they've been managing this property from out of market. They've been managing this property from Knoxville, Tennessee. And although it's still here in Tennessee, it's about 3.5 hours away. So they have not had their finger on the pulse. And what that is allowed for the property to really not meet its income goals and not to really obtain operational efficiency across the property. So that said, we have an easy option to come in here and just improve operations. That simple. But what's really made this a stellar opportunity is this same seller they have a development project in Chattanooga, and that development project has fallen behind compared to what their expectations were when they took it on. So they have to do a refinance coming up in the middle of the year, so late summer here, where it's going to require substantial cash in to the property. And they are having to sell properties like this to be able to come up with the cash they will need to be able to meet that closing. So what does that mean? Well, we have a number of other properties in this market, as we've mentioned, and those properties have gone out and appraised at valuations anywhere between 145,000 a unit to 165,000 a unit. We are buying this property, which in many cases is newer vintage of some of those other properties, and many cases has very similar layouts to those other properties, for just over 90,000 a unit. So the total purchase price is 32 million. Why are we getting such a discount? Well, as we spoke about,
and I want to pause for a quick second and share that, honestly, I really want you to invest in real estate. Now, my new goal is to help 1 million people invest in real estate. So 2 things I would ask from you. Number 1, if you get anything out of this episode, please share it with somebody else. Just say, hey, check out Dustin and Master Passive Income. He really wants to help 1 million people to invest in real estate. That's number 1. Number 2, I want to get you to invest in real estate. Get my real estate investing course absolutely for free. Text the word rental, RENTAL, to 33777. Rental to 33777. I'll literally give you my course, show you how to find an area of the country to invest, how to build the business first. I always talk about that, and how to find the right properties, how to make sure you're getting experts to do the work for you, and scale the business to where you're making $250 or more in passive income. Scale it to quit your job. I'll literally get to you, or go to masterpassiveincome.com/free course. Obviously, it'll be in the description, but I really, really want you to invest in real estate, because the more that actual, normal, everyday people own real estate that are good landlords, the better everybody's life gets.
They bought this property over 10 years ago. They have a very low basis on this property. So there's a large amount of cash they'll be able to pull from this property when they sell it, even at this purchase price. And because of their time crunch, they don't have the time nor the ability to go out to market and openly market it. Today, if this property was openly marketed compared where it stands today, they would probably be able to sell this for somewheres of a 30% premium compared to what we're actually getting it for. So we're very excited about the opportunity walking in. As mentioned, 90,000 per unit is where we are buying this. Distressed seller, based on the reasons I just talked about. We are not underwriting to rent increases, and we're underwriting to an exit sale price below our current comps in the market. We've stress tested this in a number of different ways. We see a lot of room that we could improve this property, one, on maintaining operations the way they are and just increasing income or adding on other income drivers, 2, not increasing the income at all and just improving the operations and going and getting the economies of scale compared to the other options right there, or 3, just maintaining it as it is. We can still have a very viable product. Again, that's us stress testing it. We have a core business plan we've now accomplished in a number of other properties in this market. We will do that same property here as well. This is a stabilized asset. We have operational efficiency. Our management company that we are going to use in this town is called MMC. They currently manage just shy of 4,000 units, over 3,500 units. But what makes them stand out is that the units they manage are right here, not only in Murfreesboro, but the county. So where the current seller manages from Knoxville, they do not have their finger on the pulse. Our management company not only manages the majority of our portfolio, but also manages a ton of other properties in this market. So they know exactly where this property will rent at. They know exactly what the operational costs are. And more importantly, because of the volume they have, they get the best pricing for their turns. They get the best pricing for their contracts because they bring such volume to their market, to the market, right, to the vendors that they serve right there. So we will be able to garner a very high amount of operational efficiency. I want to talk to the 506C.
Oh, perfect. So this is a 506C offering, meaning 506C means we can put it out to everyone. Are we doing the 506C now?
Yes.
Fantastic. We can put it out to everyone. We can market, but you need to be accredited for this particular deal. Our minimum investment is going to be $50,000. PPM is going to be available, or has been available since the 15th. The PPM needs to be signed by the 31st. Funding deadline is the 10th, and the closing date will be the 20th.
So again, this is a 506c. It's a offering for accredited investors. And so accredited investors is someone who either, a few of the linchpins that you will have as part of being accredited is that you will have made $200,000 or more the last 2 years as an individual, or $300,000 a year for the last 2 years as a married couple. You could also have a net worth of more than $1 million, not including your home. As a business, you could have a business with more than $5 million of assets. So there's a couple thresholds which could deem you as accredited. So if you are not sure if you are accredited or not, talk to Dustin, have a conversation with us. We're able to help you go speak with your accountant, speak with your certified financial advisor, or use some sites to determine if you are. This does have a quick turnaround. So why does it have a quick turnaround? Well, we talked to this earlier, is that there is a time capacity with the seller needing to sell this property to be able to get the funds to be able to do this cash in refinance. So although we are getting a great opportunity, the turnaround time is very quick. So we are looking to get questions. So if you have any questions in the meantime, feel free to reach out to Dustin and team. We'll be able to get back to you quickly to make sure you're clearly in the know on what this property does. So the investment highlights for this property. I'm going to start on the right side. This is an 80-20 split with an 8% preferred return. Well, what does that mean? So of the cash flow that comes to this property, each year we will have a threshold where, based on your investment, we will have to return up to 8%. So if you, easy math, invest $100,000 each year, our target return for you is 8% at minimum. So 8%, $8,000 on your $100,000, and that will be paid out quarterly. If we meet that threshold and we outperform that, then there will be a 20% promote that will go to us as the partners, and then 80% to you as the limited partner. We are putting on debt from a Fannie Mae loan. That debt has a loan to value of 75%. So the purchase price is $32 million. We will have a $24 million loan. Our target interest rate is based on the Treasury. Based on today, that interest rate is 6.18%. So based on the market, very good. We have 4 years. Although it's a 7-year term loan, 4 of those years will be interest only, meaning that after year 4, we will go to amortizing to the end of year 7. Our hold period is targeted anywhere between a 5 and 7 year window. Although, as we touched on prior, we have turned a number of properties. It will be 16 now where we have sold them. We have sold them anywhere between month 13 and year 4. So why would we do that if we have a 5-year horizon? Is that if we get ahead of the business plan, and maybe we're at our business plan where we intended in year 5 and year 2 or year 3, or the market has really come behind us, we will look to see if we can get you the best returns today compared to waiting it out that part. Now, our yield projection, this is based on a $100,000 investment, is that we target an equity multiple of 2.23 is our target, meaning that if you invest $100,000 over the course of the 7 years, is that we will return you $223,000. That will include your original principal. And then that will be on top of that, the cash flow that comes out each year, along with the profit at sale. That will average out to a target of 17.61% average annual return. Now, the cash on cash target is 8%, but the average annual return includes the profit of the sale. And our internal rate of return based on the return of money timeline is 14.49% as a target. Purchase price, $32 million. Capital improvement budget, meaning our construction budget, is just shy of $1.9 million. With that and closing costs and fees, operational expenses, it comes to a total capitalization of just over $35.5 million. This is across 355 units. They are built 1973, 1995, and 2000. Current occupancy is 94%. And it just shows that right now, today, our portfolio is 95% or greater on the occupancy, our existing portfolio, and we are charging higher rents based on the market. This property is charging lower rents because they do not have their finger on the pulse and they're only achieving a 94% marker on their occupancy. So it just shows the ability we have for this property to go in there and just improve it very simply by just matching what the market extends to us. Again, this is a 506c opportunity, 7-year hold, as we reiterated, with an 8% preferred return and an 80-20 split to partners. So just want to show a little bit here. If you see in the top, that's Titan Capital Group. That's one of our partners. That's Chad King and the Kings, Yarusi Holdings. We are on the left side. You could see that we both tied to the same office building here in Murfreesboro, Tennessee. As you look around, these are, the Cove is on the top right there. You can see the duration of where we are. That's the property we are buying. Current properties we now have within our portfolio we're operating. The Cottages of Bear Branch, 64 units. The Dempsey, 101 units. Stonehouse, 44 units. The 902, 93 units. That was our first property we brought here in Murfreesboro, Tennessee. And one of the main reasons that we decided to actually move here is because this was the first property we purchased here with the same team. That was back in 2020. We purchased that property, 93 units. We turned, meaning that we renovated 91 of the 93 units in 1 year. We improved the property, doubled the NOI, and purchased that property for just comparable to the per unit price we're buying this property for. And that property just in July appraised out at just about double of where we purchased it. So it appraised out just over 16 million, and we purchased it for 8.9 million. The Metro Apartments on the left right here has 32 units. And then the Doosan Apartments up on the top left that's being rebranded currently and is being repositioned. That's 125 units here in Murfreesboro, Tennessee. This looks a little bit to the returns here. If you see in the bottom, it shows you the whole period based on the returns. So right now, based on the anticipated 7-year hold, our target returns would be a 14.49 IRR. Equity multiple of 2.3 million. However, if the opportunity was served based on the same returns through sell in year 5, we would still have a very healthy return of just shy of a 2x multiple and a 16.2 IRR. This shows on the top right here, the hypothetical $1 million investment. This would show your cash flow of what you would look at. So year 1 is we're making these improvements and improving the property. The target cash on cash return would be 4.8%. And then you will see 8.8%, 8.8%, and 9.6% for the years 2, 3, and 4. You do see a dip in year 5 and year 6. Well, this is because the loan moves from interest only to amortizing. So although the cash flow does reduce within these years of the target, you now have the other silent, awesome, great thing of multifamily assets is we start paying down the principal. So it starts to help on the profit on the back end. So your return on the bottom left, hypothetical $1 million investment, you invest $1 million. Total returns over the course of the 7 years will be $2.232 million, which is an investor profit of $1.23 million. These are some of the comparables, and so it may be a bit small on your screen there. The main thing to note here is that if you look on the bottom of each, you see the shaded portions right there. Those shaded portions are the current assets or current units here at the Cove. They are all, as mentioned, below market on the rent. And if you look right now, you'll start to see Northfield Commons, Ashwood Cove, Colony House. Those are properties that are managed by our property manager. So we have a lot of properties that are within our portfolio that are either our properties or are managed by our property management that are achieving the market rents. So this is based on 1-bedrooms. You'll see this sales comps as we look in here. The City Edge Flats, 83 units, 163 a unit. Easton Place, 217 a unit. Redwood Park, 171 a unit. The Southern, 168 a unit. All comparable properties here. This is the Cove, as you see in the picture on the right. All of these properties are similar vintage. There's a few here that are slightly newer, just to 2002. But if you look at the per unit and just the sales price overall, it speaks to the value we're getting on this opportunity here and why we're very excited about it. Again, this just looks at some more of the sales comps as it goes through right here. Everything Crossings, the overall Creek Apartments. I mean, some of these are newer vintage, but if you look throughout that one page beforehand spoke more to the area. But if you look at just some of the opportunities for sale potential, it again trends to what we can do. Now, for our sale on a per unit basis, we're only modeling this out to sell this at 130 a unit. So that's what we feel is a very conservative expectation for a sale price compared to these. But if we can meet that and exceed that, the opportunity for an additional returns skyrockets from there. These are the 4 properties tied together here. In between is 1 property. But if you see the bottom right is the actual Cove properties, then we have the Oakland properties up here to the middle and left. There is a community pool, community clubhouse, multiple laundry facilities, a sportsplex, multiple dog parks, grilling, and pergolas. So the properties themselves showcase well. It just simply comes down to operations. And so we'll walk in there with a professional team. We will start day one by setting expectations, putting in the proper tenant base, setting the narrative for what will happen on the income, and to start to put in the proper team to moderate the expenses to really set the narrative going forward. These are some of the layouts. The nice thing here is this complements our current portfolio, where we now are starting to have a unit type to meet every tenant need. So here at the Cove, it has everything from 2 bedrooms, 1 bedroom studio. So we have a full blend of mix here. And for our renovation package, we will go in there and renovate these units solely to a classic nature to get this market rent. So we do not have to go in here and do a premium upgrade. This will not be needed to meet the demographic and meet the need for where the income will go for what the market rent will be. So it's very simple. We expect our turn costs to be anywhere between $7,500 to $9,000 a unit at the max. The majority of our exterior work will be built where we targeted at the 1973 building that needs new roofs and also needs new siding. Again, the approach here will be manage this property better, improve the operations, moderate any expenses, capitalize on the additional income levels that can be achieved. That's going to set a very big trend across this property to allow us to improve it to match the market. This just shows some of the interior. Very basic layouts, very simple turns. It's our bread and butter. We'll be able to replicate this in a good way. We will go, we've changed the paint scheme to go in there, agreeable gray with a white trim across. So we'll start to change our paint scheme just to match our existing portfolio. But again, we will continue to push with either LVP or tile within the kitchen in common ways, and keep with carpet in the bedroom. The unit upgrades for vanities, for kitchens, and for appliances will be met as we come across units that are needed, with a lot of this targeted at the 1973 building. This overall underwriting gross potential rent across the portfolio, $3.9 million. We are doing about a 10% jump in year one. And that serves where really the target base right now is about $150 to $200 on the market. We anticipate to have about 12 to 15 units a month that we will turn, with a goal of touching about 50% of those units over the course of the first 12 to 18 months. Big part here is that we will also do a cost seg study. That cost segregation study within itself, that allows us to do a financial engineering study. There are many bonuses to multifamily investing. You have the opportunity to have the cash flow, to have the appreciation that we'll get from the market, and also the forced appreciation from our improvements and the tax advantages. And another one is depreciation. What we do here is that we do a financial engineering study called cost segregation. That goes in and puts components into basically 5 and 15-year categories. Your carpet doesn't last for 15 years, doesn't last for 27 and a half years. So what the study allows you to do, it allows you to push forward the useful life of these components. And instead of having depreciation streamlined as an average year on year for 27 and a half years, you can put this into accelerated buckets. So we will take the lion's share of our depreciation as bonuses throughout the first 5 years here. And what this does is it allows you to have paper losses, although we're giving you distributions that may be able to help you offset some of your tax hits or some of your capital gains from some of your other investments out there. So it's a very lucrative strategy to help you to offset some of your gains potentially, if you can use that. This is our property management company. It's founded in 1988, manages over 3,800 units, has about 80 employees currently. 480 units of ours are managed by them currently. Great in-depth team, are truly top-notch in many markets. We have property managers that are about an 8 out of 10. For what we can find in the market, they're about a 12 out of 10. So top in line. We're very excited to work with them, can continue our relationship there with them in this market. This is the investment disclaimer. Again, this is not a guarantee of returns. This is an offering discussed in the information here is that this is our prospectus on what we intend for this property to be. But please read through this investment disclaimer to make sure that you understand all of the return opportunities, but also the risks that come in the nature of any investment, including this one. that's where I'll leave it right here. Dustin, I will allow you to jump in. If you are having any questions, make sure you reach out to Dustin, reach out to the team here. We'll be able to get back to you and talk to you on any of those questions that may be just about the property itself, or even in terms of your investment nature. Dustin, I'm sure you have a way that everyone can reach out to you to connect with you from there.
And that is it. Now, again, if you want to go watch the video, the link will be in YouTube. And if you want to invest, the link will also be in there as well, masterpassiveincome.com/Cove, COVE. Now, we're getting really down to the wire. If you want to invest, June 10th is the last day to invest. Very, very simple to apply. So check the link to apply, and then we'll reach out to, or I will personally reach out to you if you want to invest. But appreciate you guys and super excited to be investing with you and jumping into multifamily at Master Passive Income. And that is it for today. Go ahead and get my free real estate investing course. Text the word rental to 33777, RENTAL to 33777. You can also join my Real Estate Wealth Builders group coaching. Get all my courses. All right, guys, we'll see you in the next show. See ya.